Okay, so let's take a look at some credit alternatives. So the first credit alternative we have is going to be shopping around. Now, you need to evaluate the contract. If you don't understand what is in the contract, ask. Underline, highlight any terms, any fees, any consequences, such as will your item be repossessed? Again, these are important and it's your responsibility to make sure that you understand. Okay, so we've talked about this before. You are responsible for yourself, your credit history, and what you do today and how you handle your credit today affects you in the coming years. So 5 years from now, if you want to buy a boat, a house, if you went in over your head now, it's going to follow you. Remember, higher interest rates, lower FICO scores. What is one of the determinants of a FICO score? That you pay your bills promptly. So let's look at collateral. Now, if you've ever watched programs like Repo, you have seen what collateral is. It's basically the lender is giving you money, and to ensure that you pay back promptly, the item that you are borrowing the money for is your collateral: boat, car, house. And if you've ever seen programs like Repo, you know when people don't pay, they come and they repossess the car. Now, an unsecured loan from the business perspective of a lender is not a good deal. So another alternative, and you probably will see this on TV maybe in March and April, is when a lender gives someone a loan with the intention of getting paid through the tax return. So IRS would send the check or transfer the money over to the lender, not the borrower. So if I have a loan to the ABC company for $2,000 and my tax return, let's say, is $1,700, I will tell IRS to either send the check or deposit virtually that $1,700 to my lender, and then I would be on the hook for the additional three. So an alternative to credit is pawning. Now, where I live in North Carolina, pawn shops are very prevalent. People pawn cars, they pawn jewelry, they pawn instruments. And what this does is you go into the pawn shop, you give them the item. They evaluate what they think that item is worth. They give you the cash. Now, you are to return within a certain period of time and repay them plus whatever interest they charge, and they will return your item. If you don't pay it back in full by the designated due date, it becomes property of the pawn shop, and then they can resell it. So payday loans, unfortunately, this is a big problem. Unfortunately, many low-income people who don't have the money to cover emergencies, they go to payday loan places where they get a loan. Now, the problem is the default rate, their interest rate is extremely high. So if you have a $500 payday loan, it's usually 2 weeks, and your interest fee might be $110. Now, I have the formula there. on a 14-day loan with a 15% interest rate. So that is very high. Now, these are called predatory loans, and again, they exploit the lower income population, the unbanked. Now, 27 states allow payday loans. If you go to Check and Go, you will see if they operate in your state. If you have relatives in another state, you might want to see if they have them in that state. But again, this unfortunately is prevalent. And it is, they're trying to have laws to prevent payday loan companies from really exploiting people. I do have some videos from PBS for you to watch as well. I hope that you found this interesting.